Hello and welcome to the Ascender Academy. It's my pleasure to welcome Johnny Fry, the CEO and founder of Team Blockchain, a business which has been around for a number of years now, and it's basically a research tool and analysis of blockchain and the implementation of AI. But many will know Johnny from his time as the chairman of a UK company. For half a dozen years, was it, Johnny? I think it must
Nearly
be
6.
Yeah, I think it was 6 years. But also prior to that, Johnny, you were a founder and chief exec of a very well-known and large wealth management business, an asset management business, based here in the UK. Welcome. How are you, sir?
I'm very good. Nice to be back online, and good to see you. And thank you for listening. And goodness knows why you're going to listen to and watch Stuart and I. But good luck.
Yeah. Well, welcome to the Ascender one. It was Gem Cup last time. It's now Ascender with a new logo and stuff. Now, Johnny, we want to sort of delve into blockchain and the whole issue around tokenization in particular. And tokenization, I've been to a number of conferences, and I know you've actually been at many of these conferences and spoken at these conferences, where tokenization is discussed at various levels. And there's almost a FOMO moment going on in the industry, whereas, are we missing out on this situation? But for our viewer today, can you just explain to us exactly what is tokenization and why we as an industry should be paying attention to it?
Okay. All right. Let me first start. You've used the word blockchain, which means different things, different people.
Yeah.
I must admit, when I first heard it, I thought it was blockchain. But so you may get confused. But essentially, all a blockchain is an Excel spreadsheet on steroids. It's just a way of capturing, storing, and holding information. So we shouldn't get too tied down with that. And likewise with the whole thing of tokenization, people dress it up into being something really grand and fancy. But most of the viewers and listeners to this will have used either Visa or MasterCard. And essentially every transaction that you do, they tokenize your information. They put it in a format which makes it more secure that they can then use it to ensure the right merchant gets paid, the right banking gets deducted. So all we're talking about is holding information very, very securely and in a different way. But there is a bigger reason why, particularly asset managers, and much more importantly, why their clients should be taking note of this. And that is something. It's a very old-fashioned thing. It's called sort of looking after your customers, or as the regulators call it, treating your customers fairly.
Yeah.
And essentially, if we go back in time, Stuart, you had two types of ways to access a fund. You had a retail share class and an institutional share class. And the only difference was there was a difference. The institutional share class had no initial charge and had a slightly lower annual management fee. But now what we're seeing, if you like, are a tokenized share class. So the underlying assets within the fund are identical. There's no difference in what the fund manager is doing. But there's a huge difference in terms of what the asset manager, the asset management company, and what they're doing. And in terms of treating customers fairly, it's really simple. Do you want your income, your distributions twice a year, every 6 months, or potentially would you like them hourly? Do you want to be able to deal once a day when it's convenient for the asset manager, or when you're reviewing your portfolio, perhaps in the evenings or the weekends, or something happens like we've seen recently with Iran? Do you want to make a decision, say, actually, I think this is a good opportunity to get in or get out of a market, not have to wait till Monday morning or Monday afternoon when the pricing actually happens? And then you've got the whole thing around pricing the fund. Do you want the asset manager to price a fund, or do you want them priced like an equity, like a security, like an ETF? It's priced by market makers. And I think once the regulators understand this, I think it's very, very difficult for the current usage to continue. And that's why it's so, so important. And then on top of that, you've got the whole thing of artificial intelligence, whereby we're increasingly seeing AI going to be used to offer you a very customized portfolio that's going to be managed and monitored by a machine. Now, this isn't my view. This is Larry Fink, He runs quite small little asset management business in America.
Yeah, name rings a bell.
Yeah, the name ring a bell. I think only about 12 trillion or something like that. The biggest fund manager in the world, and he's basically saying we're going to see the tokenization of everything. The fund management industry is 145 trillion. The securities market in terms of equities about 120, bond market, debt market 130, private equities, private credit, derivatives, real estate. All of these asset classes, to a great extent, will end up being tokenized, so that you can actually buy and sell when you want to, as opposed to being told when you can.
Okay, so I understand what you're saying at the beginning there about treating customers fairly, and looking at if I was an investor saying when do I want my dividends. I get that. That's really very important. But from the asset management point of view, if you're a fund manager, I always talk about the plumbing and all about the ecosystem around that plumbing. There's some big challenges there. We've talked in the past about tokenizing a share class rather than the whole fund. That's the first step. Have you seen examples of that in the marketplace where fund managers are taking their initial steps into tokenization, or are people sort of waiting and seeing?
No, look, it's interesting. It's the biggest fund managers in the world that are doing this. So I've already mentioned BlackRock. In Europe, you've got Amundi, biggest asset manager in Europe. In the UK, the biggest asset manager in Europe. Well, who's the biggest asset manager in the UK, Stuart? Think of umbrellas.
M&G?
No, Legal & General.
Or Legal & General.
You might want to edit
umbrellas,
that bit out.
with you,
You might want to edit that one out. But no,
I know
Legal
the
& General.
market so well.
1.2.
Well, I was right. I had the G right.
We had the G right, yeah. So, 1.2 trillion. Literally, in the last couple of weeks, they've announced they're going to tokenize their money market fund. So the fund management industry, I think, is very, very tied up potentially with the payments industry. Now, in the payments industry, according to McKinsey, by 2027, you're going to see $3.2 trillion of income a year being generated through payments. Now, at the moment, you hopefully don't have your spare cash sitting in a current account earning no interest. You put your money into a deposit account, or as the Americans would call it, a savings account.
Yeah.
But if you want to go and spend money, then you put it into a current account or a checking account. And potentially we're seeing more and more interest of people wanting to make payments using stable coins that earn no interest, but holding their money in a tokenized money market fund, which actually does pay an interest and is a lot safer than a bank. And this is really, really important. So the 9 trillion in money market funds could actually become substantially more, which is why we're seeing a number of people launching money market funds here in Europe.
But I can see that. I can, again, looking at from an administrative point of view, money market funds are relatively simple compared to an equity where you've got, potentially, 300 lines of different equity positions and multiple currencies and certain different exchanges and all that stuff, which is massively complicated. So I wonder whether or not the administrative aspects of our industry has caught up in order to deliver that. And maybe is it going into the money market funds is a first step for them, so they make sure it works and then they move it to. Do you see that, or do you think they're going, well, actually the biggest market in the world are the money markets. That is without doubt the biggest market. So it would be foolish to ignore that and then to move into bond and equity. Actually, bonds will probably be last because it's OTC stuff. But I imagine in the equity markets, they'll take more mature markets first.
Stuart, yes, you have a logic there. However, if you look at what the London Stock Exchange have recently done, they're actually making markets, and the new digital exchange the London Stock Exchange have launched, DIS, is actually making markets in private equity and private credit funds. So we've seen the very illiquid markets of private equity and private credit tokenizing their funds. And some of the first funds, actually, the very first fund, non-money market, was the KKR fund. It was a healthcare fund. It was a private equity fund in America by Securitas. So we've seen the private equity markets, and now we're seeing exchanges being built to actually make markets in these funds. You know, NASDAQ and the SEC, or the SEC have given NASDAQ and the New York Stock Exchange permission to launch. We're going to see a new stock exchange down in Texas, out of Dallas, which is going to be dedicated to actually trading tokenized digital assets. You've got companies like 21 and Swarm in Europe. You've got Archax and the London Digital Stock Exchange here in the UK, Switzerland, Singapore. So the infrastructure is there in order to trade these tokenized equities, tokenized bonds, and tokenized funds. And the funds, I think they're much more relevant for many people because that's where they hold their pensions typically.
Okay. I guess there must be a significant amount of development underway with platforms here in the UK. I mean, German platforms are much more advanced. You know, they're already trading ETFs easily, for example, and it's a different from an asset class point of view, whereas it's not so here in the UK. But do you know there's an engagement with the platforms, anything from the Avivas to Zurichs to the Transacts, etc., around about tokenization?
Well, what's interesting is, the underlying asset, the third-party administrators. So you got people, you got like Cassis, JP Morgan. They are already, Apex. They're already Avinium. They're already building and got the capability, and they're going out and tokenizing funds for fund managers. So it's already happening. Okay. In terms of the platforms, they're very much driven by demand from the customers. But one of the problems with the customers is that they don't really understand. As soon as you say digital assets, they immediately think you're talking about crypto. Well, look, crypto is 2.3 trillion, and it's a sort of asset class. Yes, you should have some exposure to it. In the same way, Stuart, for years we've been saying you ought to have some exposure to smaller companies. But it's 2 or 3%. Most of your money is going to be in, more liquid, larger cap investments, and that's the same in tokenization. So I think there has been a degree, and we've also got regulation to an extent to blame for it. From a legal point of view, certainly in the UK, we've had very clear definitions as to what is a digital asset, but it's been the regulation that sort of lagged behind, and people have said, oh, well, once I've tokenized something, oh, you're involved in Bitcoin, you can't do that. You're not regulated to do that. And I think the regulators really have a lot to answer for, because going back to this thing of treating customers fairly in terms of having confidence in markets, if you've actually got greater transparency and you've got the ability to trade when you want to trade and get your income much more frequently, all those things really should have been driven by the regulator, and are actually asking the fund buyers, why are you buying an equity income fund, which is priced by the actual asset manager? You don't get the income that often. Why? There is a better alternative. And I think that message is slowly getting through, and we're beginning to see some clarity coming through. And I think in the UK, we've seen a chap called Chris Willard, who you may recall was the interim CEO at the FCA. He's just been appointed, this is sort of mid-April, as, if you like, a digital asset czar, who's basically going to come in and really help the financial markets and help the fund management industry really understand the pros and cons and how they should go about this.
Okay. To that point, what's the time scale as far as the implementation of this? Because you and I have been talking about tokenization now and digital assets generally for 3 or 4 years. I don't see it's mainstream. I don't see, we've had a number of our managers say, what's our position? And we sort of go, well, we'll see what happens elsewhere before we implement it. Now, obviously, as a sender, we'd like to be more of a market leader and look at these things more closely. But where do you see the timing? Will we still be talking about tokenization in 5 years' time, or will we consider this a mainstream aspect and we'll move on to something else?
Okay, so if I can perhaps answer the question a different way, why now? Why is this? What's the catalyst for change? And the catalyst is the dreaded AI word. Not artificial insemination, not the way they greet you in Newcastle, AA man, but so-called artificial intelligence. It's not intelligent, but it's fueling adoption, and it's having a huge impact because people are beginning to realise that this isn't just about a fancy sort of Google search. Again, you're listening to this. Look at what your colleagues, look at what your family are doing. when they're on their phone or when they're on the laptop looking for information. More and more people are using Grok, Gemini, ChatGPT, the large language models. They're not using Google. You know,
Yep.
Stuart, you and I are old enough, vaguely remember things like AOL, America
I
Online.
use Encyclopedia Britannica. Sorry, what was that?
You still got carrier pigeons, mate. No, but you know, Netscape, all those things went, and I'm not suggesting Google's going to go, but the way in which we live our lives, increasingly AI is going to have a much, much bigger impact. And therefore, off the back of that, AI doesn't care about a brand. It doesn't, all it wants to do is get raw information. And is this fund, is it appropriate or suitable for you? So this is going to be a real opportunity, I believe, for small boutique fund managers that really make sure that they are positioned to take advantage and they are seen by the large language models as a good source or a good home to put your income, put your capital, make your investments. And AI is going to start managing your money. And we're just on that cusp now. It's going from looking and asking questions to actually acting on your behalf as we begin to see agentic AI coming in. And I know all this sounds at one level a little bit scary and hairy, but if you don't grasp this opportunity, your competitors will.
Yeah, I totally agree. I do feel that the funds industry is massively inefficient. We've talked previously on previous chats about the application for a fund goes on for pages and pages and pages, whereas I can open up a Revolut account in 7 clicks. The next generation expects immediacy, and I think tokenization, from what you've said and from what I've read, helps people gets that immediacy. We've got to make sure that the advisory chain linked to that is there to support it, so people are making informed decisions around what they should be buying, and people aren't going to get missold stuff. But if you had the crystal ball, going back to that point, do you see any fundamental shift in thinking in the industry, or do you see a pushback from the industry? Or do you actually believe that they will be fully embraced over these next few years?
Look, not everyone is gonna jump on board.
Yeah.
You know, I remember very clearly when you used to come down to Premier and you were working for various different asset managers and say, well, look, what about buying this fund or that fund? And you were talking to our fund management team on that sort of basis. I can remember the IT manager coming in and saying, we need a website. And I said, well, hey, wait a minute, we've got this, we've got the company brochure. And he said, no, we need a website. And I see very, very similar parallel. Look, the asset management industry, collective investment schemes, started by the Dutch in 1780s.
Yeah.
They were the people that created collective investment schemes as we know them. But now we're beginning to see, and I think your point is very, very relevant. Unusual for you, in actual fact, this is, to come up with something which is really good. But look at the next generation that's coming.
Yeah.
And they're talking about 124 trillion is going to get passed down from our age group to the next generation.
Yeah.
Now, our kids have never seen a bank manager, will never see a stockbroker, and I wonder whether they'll even see a portfolio manager. But they've got 124 trillion, and what they want is they want to be able to. I think I've got one in here. They want it on this.
Yeah.
They want to deal when they want to deal, when they want to deal, and they want that immediacy. And I'm not for one moment suggesting that we start seeing the funds industry become day trading. Not for one moment.
No.
But we've got to respond to the way, fortunately or unfortunately, we're in a much more digitized environment where people want that immediacy, want that transparency, want that information, and having reports which were produced 6 months ago about whether you bought or sold a particular share, it's just quite frankly not good enough.
No.
And we're going to have to see much more openness, but we're not capable of processing that information. But our AI agents will be set up to do that. So if you've got to go and find a bit of paper, Stuart, wasn't that long ago in COVID when Gemini was sending faxes to the Central Bank of Ireland of our daily positions, bits of paper. How can the AI go into the filing cabinet? It can't. So asset managers, you need to embrace this, because otherwise you will find funds will go in the same way, Stuart. We're of an age where we say, oh, we're not going to see index funds. and we've seen them give a real run for the money for the active managers.
Mm-hmm.
And I think that's what's going to happen. But this time it'll get driven A, by AI, and B, by regulation. Because once the regulators understand this, it's very difficult to actually justify why you haven't tokenized your fund. But again, it's not just me. These are people like, Amy Johnson of Fidelity, Larry Fink at BlackRock, Franklin Templeton. These are very big, Legal & General, we just mentioned. These are big asset managers who are saying, this is better for the customers, this is better for our business.
Yeah, I couldn't agree more. Johnny, it's been an absolute pleasure catching up with you today. I know you produce a really good piece of work on a regular basis called Digital Bites. We'll put up on the screen where people can sign up for that. But in the meantime, Johnny, it's been an absolute pleasure. Thank you so much for your time, and I look forward to catching up with you in the not too distant future. All the best.
Thank you, and thank you for listening and watching us.